Hello guys, welcome to another video of Optest. In this video, we are going to talk about another backtesting method. And this time, this is a positional backtesting method. Earlier, we covered several intraday based backtesting methods. So let's go to the positional to see which backtesting method we are going to cover. We are going to cover a new backtesting method called as SAR technical trading. SAR is nothing but stop and reverse. So if you're following a trend following a trade, then if you get a long signal, then you buy in a long call option, and if you get a short signal, then you exit the long call option and enter a long put option. Now that is called as stop and reverse. Okay, so you enter a long call, you stop when you get a short signal, and you enter a long put. And again, when you get a long signal, then again you stop your long put and enter a long call. So that is it's called stop and reverse. So we are going to see this, how we are going to backtest this method. And the strategy that you're going to use a long call and long put strategy, right? Stop and reverse. When a long signal is generated, then we enter a long call. And when a short signal is generated in the market, when we buy a long put. We will show this with Nifty underlying. And we will backtest this for again 2 years. Okay, and we can use either monthlies or weeklies. Since this is a positional, so we'll stick to monthlies options. And we lose one quantity, and here we have so far only put PNF and Renko based stop and reverse methods, because those are very good trend following systems. And in future we'll add also moving average based and candlestick based indicators as well for this trend following system, as well as the stop and reverse. So for now, we are going through one Renko based stop and reverse backtesting method. If you don't know what is a Renko system, it's nothing but it's a different charting system which came out of Japan. And there we have bricks plotted for every, if the price goes up, a green brick, and if the price goes down, we plot a red brick. And you can check these Renko charts in zone.definedgesecurities.com, which is freely available to all users if you open the Demat account. Now, as you can see, we have these green bricks when the price goes up and red bricks when the price goes down. And this change happens with a parameter of 0.05%. Whenever that change happens, you plot these bricks. Okay, so this is a purely price action based charting system. So no time involved in this. Okay, so that's why I call these charts as noiseless charts. Okay, because there is no time involved, only pure price action based chart systems. And in this Renko charting system, we have developed our own indicator called as MAST. It's nothing but moving average and super trend based indicator. And here we plot a cloud. We call it as MAST cloud. And here we buy in this SAR based system. We buy whenever a green bar appears above, comes just out of this red cloud, right? Which is actually when this cloud turns into green color, right? Whenever that happens, we buy a long call, and we exit this whenever a red bar appears below this green cloud. Okay, so stop and reverse, stop and reverse. like that. Okay, it's very straightforward system here. Now here we have used 0.05% as our brick size on Nifty continuous futures. All right. So brick size of this, and so here the parameter that we're using is the future price on which we are plotting the MAST Cloud instead of option. And the condition is stop and reverse, and MAST Cloud, as I said, if it is a green bar above the red cloud, we buy, and red brick below the green cloud, we buy a long put. We reverse it. All right. So now we add this condition. So both exit and entry we already know. Okay. Now we are using stop loss of 30 and target of 30%. Okay. And we can also keep it open if you want. Let's do both. So for now, let's keep stop loss, and then later we might keep target also as 30 and see how it performs. And here, the call strike that we will choose will be at the money strike, which is 50 delta. And put delta is also 50, which means at the money put strike. And here you can choose if you want to, buy out of the money call option or in the money call option. You can simply change the delta. But at margin employed is 20,000. See, that's a margin or the capital required to buy a call option or buy a put option. Okay. And the brokerage is around 60 rupees, like for entry and exit of one particular leg. So now let's backtest and see what results. Okay. So here, okay, I have to add this condition and then we'll check. So as I said, it's very straightforward. No complexity involved at all. And it will take a little bit of time, not too long. So we used only one quantity and we used monthly options and the stop and reverse. This is long call plus long put. So it's a strategy which includes two different options, but not both of them at the same time, but one at a time, at any given time. So we'll also check some examples if any of these things matched in our backtesting. So we'll have to wait for a little bit more time because these are Renko charts and they take some time to generate signals and then we have to deploy them in options. So it takes some time for this complexity. But you will see that we get some clean signals here. So we buy here and we stay in the long call till here, and then we exit here the long call and enter the long put, and then again we come all the way here and then we exit somewhere here. Okay, maybe here, I believe. Let's see. All right, so results are here. Now results, they look very good. Okay, and as you can see here, this is a trend following system and the win rate will always be less because there will be times when the market is sideways. We keep enter, exit, enter, exit, enter, exit. And, because of that, these kinds of things can happen. For example, here in this area, as you can see, we enter and then immediately exit and enter and then again exit. So these things can happen for longer periods. And then you have to stay through those phases for you to exploit when you have big moves like this. Okay. Like several hundreds of points of moves. To capture them, you have to withstand these small losses. Okay. All right. Okay, so expectancy is negative. So in the long run, this may not be very profitable. And usually this happens with trend following systems. And drawdown is also huge. Okay, in the early periods, always the drawdown is higher because this is a trend following system. And but returns are very good in this case. Okay. Now the number of exits we is by stop loss is 46 out of total number of 425 trades. Okay. The brokerage is 25,000. And the max profit in one trade is 38,000. Now you see these big moves that I talked about, right? This is what you get. But then you have to take small losses like 2,000, 1,000, or those kind of losses. And the maximum loss in a given trade was only 5,000. So that's the advantage of this trend following system using just long call and long put. So you don't have undefined risk in this case. Okay. Now, so 1400% of returns that you got using this system. Okay. Now let's check if any of trades can be captured in this case. Now in January 2024, 23rd, we got one signal. Now let's check. January 23rd. Okay, so on January 16, we got one signal. Okay, so let's check that. January 16 at 134. Okay, here January 16, we got one at, see, 134, we got, okay, around 133 or 134. So here we entered a long put, okay. So at the money call in this case will be 22,000 or so. So January 16 here, so 22,000 put. All right, so let's click on this. Okay, so here we entered at January 16 when the future was 21,985, around 22,000. And we stayed in this trade till 18th of January till 10:30. And we captured around 500 points, 550 points in this case. So we got a profit of almost 28,000 from this one trade. Okay. So we captured this huge trade. Okay. And that can be seen in the backtesting here. Okay. So this particular trade. All right. So now, what if instead of long call and long put, I mean, that is the ideal strategy when you're doing trend following systems. But instead of short put and short call, okay, then what happens? Or long call plus short call. Okay. So at least in what happens is that because if you buy only long call and long put, there is theta decay, right? If nothing happens in market, there is no time value depreciation. Now, can we avoid that using a short put and short call? We can avoid that. But the disadvantage here is that there is limited profit in case of short put and short call, right? Because when we sell an option, the profit is limited. So if there's a big move, we may not be able to capture with this. But instead, if we can do long call and short call, maybe we can capture big moves with long call and some big moves on put side, like on the short side with short call. Let's see then what happens. Does it change the results? Okay. Here the margin requirements may be slightly higher because there is a short call involved. Okay. Now everything stays same. Okay, we add the condition here and everything remains same. 2 years, and we had around 1400% of uh, profit there, right? So let's see what happens when we do this long call and short call. And again, it will take some time because we have to plot the Renko charts and the must indicator and calculate everything. And there's a little bit time consuming. And we have to wait for those results. And again, we will see what happens on, let's say, on 11th when we take a long call, and on 16th January when we take a short call. Okay, that will be interesting for us. Now, for those people who don't know Renko or anything at all, we will include links to videos that where we have talked about how Renko charts are built, how the Renko system works, how the MAST indicator works. So we'll give links to all those videos which are on our Definedge channel. You can also search them and find them. So go them and check out if you're uh, new to this system. Okay. So we have to wait again for this. Okay. Again, the results have come. Now here you can see the percentage returns are less here because the margin requirement is much higher, right? 115,000 there. It was only 20,000. Okay. Win rate is also not didn't increase much, but good thing is the expectancy has increased and it is positive now. So in the long run, this is much better than the other strategy. But only thing is that your margin requirements goes up. Okay. And see here, the drawdown is much better. There we have around 50%. Here is only 9%. So maybe this one is better than the other one. Okay. Now let's check the January one. So here again we go to our yearly calendar and click on the January. So let's see. So we got an entry on 10/1/2024 for a long call. 10/1/2024. So actually we got our call here 10/1/2024. See the green brick above the red cloud, right? So now we buy here and we stay till here. Okay. And the exit will be somewhere here around 16th January when we shift to the short call, right? So here from 10 to 16th, here we got a profit of 8,000. Now we enter a short call here, 22,000. We stop here and reverse short call here, 22,000 call. We enter and then we have a profit of this much, 7,500. So as you can see, even we may not be able to capture like a long put, but we still able to capture some of it. Because in the long put, if you remember, it was much higher. The profit using 22,000 put compared to a 22,000 short call. Okay. But overall, if you look, this looks better expectancy wise, as well as maybe returns wise not so much, but expectancy wise it is better. Okay. So look at both the strategies, the long call, long put, and long call, short call, and see which one suits you better. You can also do other way around as well. You can do long put and short put. Okay, because all we need is to have one bullish option, bullish option, and one bearish option. Now that could be long put, long call, or a short put, short call, or it could be a long put or long call. So we can decide in whichever combination we want and see which one works out better for us over long period of time. Okay. Hope you found this interesting, and you can dig into all this information. You can go year wise what are the results, month wise what are results, day wise what are results, and see whether you can add some more parameters and improve the results even more better, and find your own method, and see if you can deploy this in your trading system and find if it is useful to you or not. Okay. Okay, thank you and all the best with your trading.